Welcome, Shane and David.
Hi, Jackie. Lovely to see you, Jackie, and listen to you as well.
There is a lot of economic news to unpack this week. Let's start with the latest ABS data that has revealed the Australian economy is growing more slowly than the experts had predicted. So, Shane, can you just paint a picture for us? How dire a state is the economy in right now?
It's so dire that there are a growing number of people who reckon we'll be in recession by the end of the year. And if you're looking through these figures that we saw this week, 0.2% growth through the first 3 months, that was propped up by population growth. And that's another argument that's been going on at the moment. Once you extrapolate for all the new extra people in this country, the share of GDP per person actually fell. And we're back to where we were more than a year ago. So we talk a little bit about per capita recessions, not often, but we do, and we're well on our way to achieving that as well.
Okay, so the economy is looking pretty bad on the national accounts figures, which were released on Wednesday. On Tuesday, the Reserve Bank announced yet another rate rise, which was the 12th increase in 13 months. Could the new data we saw from the national accounts have any impact on what the RBA decides to do next? Are we likely to see a rates pause in the coming months?
Yes, we could. Partly it will come down to the inflation figures. We're not expecting the next quarterly for another 2 months. That will really be the biggest influence on Philip Lowe and the rest of the Reserve Bank board. But it would have been a bit of a shock, the national accounts to them, because the bank does its own forecasts. They were not anticipating this sort of slowdown, and it's the type of slowdown that's occurring, where it's happening. It's being driven by households. In fact, you could see the impact of what the Reserve Bank's up to. The amount of money spent by households on mortgage interest and fees was $28 billion for the quarter, just a lazy 75% up on a year ago.
Wow.
And that doesn't take into account the rate rises of May and June and not the full impact of the February and March increases. So there's a lot of ammunition that's been deployed from the Reserve Bank that is still yet to hit the hip pockets of consumers.
And so do you think, is it likely then that they might pause? I know that they've signalled that actually they've got appetite for more rate rises.
Yeah, I think somewhere along the line they have to stop again because, Lowe and others have been very clear to say monetary policy works with a lag. And this was what occurred in 1989 when the Reserve Bank last precipitated a recession, was that they were lifting interest rates, and then the economy broke. You could effectively hear it happen. And as someone who tried to get work at that time, yes, you could hear it rippling through the entire economy. And that's got to be in their mind, that tread warily. Every further interest rate rise is just that little step closer. Like we're getting into the how to boil a frog analogy, just turning the heat up a little bit by a little bit.
You've just said something there about the RBA possibly precipitating a recession. I want to come back to that in a minute, but just quickly tell us what's happening to the savings of Australians, because we heard a bit about this week too.
Yep, we're running out. It's pretty simple. The household savings ratio is down to a 15-year low, and the last time it was this low was just before the global financial crisis, when the cash rate was at 7.25%. An average mortgage in Sydney was closer to $350,000. Now it's at $600,000. So people with mortgages are really dipping into that. And the other side of it, not the other side, but a part of this, is the rental market, because rents are really ramping up quite quickly. And there's a lot of, particularly young people, they may not be directly affected they don't have a mortgage, but their landlord does have a mortgage, and they are starting to feel a real pinch. And you can see that across many social media feeds about young people going, what the hell's going on to me?
David, I want to bring you in here on the politics of it. After the RBA announced its most recent rate rise on Tuesday, the Treasurer, Jim Chalmers, was very quick to respond. He came straight out and he said that he expects a lot of Australians will find the Reserve Bank's decision difficult to understand and difficult to cop. Is this Jim Chalmers criticising the Reserve Bank. What was he trying to convey with that statement?
Conveying a distance between the government and the RBA in terms of what it's doing. But I don't think it was at the point where he was directly criticising the RBA for its decision. I think something's happening here where there are clear questions about what's driving the RBA to increase interest rates, basically because some of the information that's being released, like an increase in the minimum wage, is a factor for the Reserve Bank. Jim Chalmers would rather not dwell on some of those factors. There are messages from the central bank that Jim Chalmers is happy to have repeated, such as the verdict from Phil Lowe that this year's budget was not driving up inflation. That's a really crucial message from the RBA governor that the government is very happy with. However, there are other messages from the RBA governor about inflation in the economy, including the fact that he thinks that some of the wage rises are what he calls a risk factor. When Jim Chalmers is asked about that risk factor, he says things like, I come at it a little bit differently, I see it differently. But he doesn't directly say the RBA governor is wrong to name an increase in the minimum wage as a risk factor. That's somewhere where the government does not want to go, because it's been telling voters before the election, after the election, that it's all about getting wages moving again. So it wants higher wages. So that's clearly an issue of high political sensitivity, where Jim Chalmers in the last couple of days has really sidestepped direct questions about whether he is fundamentally at odds with the RBA governor on how they see some of these forces in the economy at the moment. And that's only going to get worse because basically the government went to the last election and then argued after the last election about, wages policy, wanting to get wages moving again. But it's finding now that the economic circumstances underneath them, or the foundations, are really moving on that debate. And if we do see higher inflation for longer and higher interest rates for longer, then I think the debate for the government becomes more challenging to pursue. And I don't think this means that people are begrudging the most disadvantaged people in the society a wage increase. It simply happens to be an economic factor that the RBA has to take into account.
Shane, I want to bring you in here. I mean, on the one hand, the Albanese government comes into government promising wage increases. Wages have been sluggish for so long. It's a very welcome message to most people in the electorate. On the other hand, they come into government and they find that the inflationary environment is such that the RBA is saying, hang on, be careful about wage increases across the board because it might fuel inflation, tank the economy. You've written that the recent rate rises exposed a tension between the Albanese government and the RBA. Tell us a little bit about that.
Well, it comes down to, if you go back pre-COVID, Phil Lowe was arguing, quite unlike a central banker, saying wages need to go up. Now he's got to this point where he's saying, well, hold on, wages are growing a bit too fast for what I like. But wages aren't keeping up with inflation. And this is where the tension's really exposed, because, hold on, the Reserve Bank's job is to keep inflation between 2 and 3. Since 2014, you can count, like Carlton has played in more finals games than the Reserve Bank has had inflation in its target, and that's 0, through that period. So the Reserve Bank has not hit its target at all. And this has contributed to the point where right now, we're going through the longest period of falling real wages on record. You have to actually go back to the Great Depression for such a large fall in real wages. So you've got the government trying to look after the welfare of all Australians, particularly those on lower and middle incomes, and you've got the Reserve Bank, whose job technically is to maximise the prosperity and welfare of all Australians, is at the moment actually hurting that welfare and prosperity in the way it's dealing with its inflation problem.
Thank you for explaining that analogy for AFL dummies like me. David, I want to bring you in here to talk about wages. On the one hand, the RBA has said that wage rises without productivity gains will add to inflation, and the business lobby is really leaning into that interpretation, but then the government clearly has an interest elsewhere. Can you tell us a little bit about what the business lobby is sort of saying as a result of the RBA's actions?
I think the RBA's interest rate move this week has really intensified attention on the basic argument between the business lobby and the government about the next tranche of workplace reform. So the government passed some legislative changes last year on workplace relations, but it's got a much bigger agenda that it's planning in the second half of this year. There's no surprise about that because Tony Burke said he would do this at the beginning of the year. He opened consultations with the business groups. This is the same job, same pay legislation. Now, everybody's arguing at the moment about broad concepts with this change because there is no draft legislation. There's a consultation. Business doesn't like what they've been hearing. BHP is saying that it would add $1.3 billion to their costs every year. I'm not sure how they can calculate that when they don't have a draft bill. They only have the consultation. But what you can see is a really important manoeuvring on either side here. Tony Burke, as Workplace Relations Minister, is setting out what he wants to do in the second half of this year. The business lobby has decided that rather than play nice, as they did with some of the changes last year, this time they're going to be much more vigorous in opposing what they see, and they're going to call it out when they don't like what they see, and they're going to campaign against it. So I think it's going to get pretty robust in the second half of this year when a bill is actually put to Parliament. What we've seen is very high-level language from business about these changes being bad for productivity, but we can't really test that. We don't have the letter of the law at this point. And so it's going to be claim and counterclaim on either side until we see that draft bill. What's most important is that there is this message to Tony Burke, don't go too far with your draft. The early message is back off now before it gets even more aggressive as a conflict between business and the government.
And the business lobby, of course, has already said that it's going to mount a major publicity campaign against the changes, which I suppose is a shot across the bow. Shane, the other part of the picture is productivity, the P word, which is going backwards. Productivity is not a sexy thing to talk about, I think we can agree, but it is very important to the economy. What is it exactly, and what do we need to do to lift it?
Look, you say it's not sexy, but I think you disagree. I think we can disagree on that, Jacqueline. But in this case, productivity, let me be clear what it's not. It is not working more. Okay, and a lot of people think, if Phil Lowe says productivity, they immediately go, oh my God, I'm going to have to work more. Let's put it this way. In 1900, the average Australian worked 48 hours a week. Today, they work an average 33 hours a week. But we produce 7 times as many goods and services per person. Now, that's because the productivity growth of the last 123 years means we are working smarter. Businesses are able to get more out of the things that they use. That might be because there are better ways to produce things. Now, the figures we got on Wednesday, you went, oh my God, productivity's fallen at its fastest rate ever. But it was actually due largely to one quarter, the June quarter last year. We had the floods in the March quarter of last year, which everyone remembers, wiped out Lismore, most of southeast Queensland. Hours worked collapsed. The next quarter, people got back into work, but they couldn't produce as much. Productivity absolutely cratered. Now, we've got a productivity problem, but it wasn't because of a flood in southeast Queensland and northern New South Wales. That's a one-off factor. But we're now getting into this whole issue of, right, how do we do things smarter? How do we get more bang from the buck that we have? Does that mean much more investment in skills and training, improving the quality of stuff? Does it mean having an AI-generated Jack Maley asking these questions? These are issues, and I can't imagine that myself, Jack, but these are the things that are in the ether around ways to boost our productivity level.
Can I pick up and just run with some of these ideas here? Because
Please.
I reckon we've already got one solution to the productivity challenge. An AI-generated Shane Wright taking questions instead of Phil Lowe, the Reserve Bank Governor, because that explanation of productivity really goes to the heart of it. And I'm going to try and avoid using the P word from now on. But let's face it, the only people who are talking seriously about this challenge are usually Reserve Bank governors and economists. Every now and again, a politician who claims that they've got a solution. but is not necessarily acting on the problem. And what I've found quite galling as a journalist who's been writing about it for a long time, too long, I'm hearing so much that reminds me of a debate from 2012. Back then, there was a different Reserve Bank governor, Glenn Stevens, and he was asked by people in committee hearings, what are we going to do about this problem with the P word? And he would say, oh, look, there's an answer sitting in front of you. There is an organisation called the Productivity Commission, which advises the federal government, and they have a to-do list on how to fix this so the economy can grow, so wages can increase, without people, as Shane points out, having to work longer. But the politicians didn't like that. I mean, I went back and had a look at the list. This is the list from 2012. All lists change. Abolish tariffs, end industry subsidies that do not deliver results, have higher competition policy, get parts of the economy competing harder because we have so many oligopolies in the economy, invest in early education to help the disadvantaged, do a cost-benefit analysis on every major infrastructure project so you know that the taxpayer money is actually going to generate an economic dividend. Then, of course, workplace reform. Now, those are some of the ideas. They've been in the too hard basket for 10 years. And at the moment, we actually have a fundamental disagreement, not about whether productivity needs to increase, and sorry, I used the P word. We have a fundamental disagreement about what the solution is. You've got Gary Banks, the former head of the Productivity Commission. You've got the unions pretty much not liking the message they get from Phil Lowe, the Reserve Bank governor, about what to do here. And so without a consensus, you don't actually have a clear vision from this government at the moment about what they're going to do to increase that so that wages can grow above inflation. And I think we're actually struggling as a country with that big picture at the moment. And without that consensus, I can see a lot of language about the P word without a lot of action.
Well, I just finally, you can, in a microcosm, we've seen this debate around, this is the argument from the government that it wants to reduce in half the number of times a person goes into a pharmacy to fill a script. And as a productivity measure, that is one. That means if I don't need to go into the pharmacy 6 times a year.
And the pharmacy lobby pushed back hard against it, but consumers like it. So that's just a very small example. Sorry to interrupt, Shane, but isn't that just a small example of the fact that the only way you get progress is if the political leaders make a hard call, stare down a vested interest and go ahead anyway.
And you can see like that vested interest were decked out in their white coats last sitting week to reinforce saying, no, we're not happy about this.
The head of the Pharmacy Guild literally wept in front of cameras in protest at that minor reform. David, the list of things that you just read out from the Productivity Commission, solutions to the productivity problem, they all had one thing in common, which I think is that they would produce pushback from the relevant lobby groups, and they would be politically difficult, and they might not have political dividends within, a 3-year term. But as the economy worsens, the government is not going to be able to blame anyone else or the Reserve Bank or anyone else indefinitely. How much of a problem will these productivity challenges and the economic challenges rain down on the Albanese government and really start to put pressure on it?
I think that pressure will come in time, but I don't think it's an immediate thing. I think we are looking at a government that's fairly sure of itself at the moment. The polls are telling it that it's doing a great job. I think that does breed some arrogance, some complacency, some laziness. And I do think that they've got to watch out for that. But let's face it, they're bound by their election promises. And so I don't think that we would expect a major reform agenda unless they want to try putting one to people at the next election. And that's one of the big questions about where they're at the moment.
Shane, just quickly, we'll finish on you. What levers does the government have that it can pull to sort of deal with these very different and sometimes conflicting economic challenges?
Well, the national accounts actually showed one of them. There's been a big increase in tax collected by people. If you want to bring inflation down, increase taxes. And we're actually going to see a fairly large tax increase from July 1 with the end of the lower middle income tax offset. There's 10.5 million people who are going to go to their accountant after July 1 with their hand out for a fairly large tax refund, and they're going to go, oh, hold on, this is $1,500 smaller than it was last year. That sort of thing's coming. Again, you've got to find a way to reform, make hard-headed reforms that encourage the economy to grow a bit faster. But that's not on the agenda at the moment. This is a government that went to the last election with a small set of promises, and the question, particularly for Crowe and other in the real political space, is whether Anthony Albanese and Jim Chalmers will have the gall to go much bigger in the run-up to the next election.
I would like to thank both of you too, and say for the record that I don't think you could ever be replaced by any AI bot. And I like to think I wouldn't be either. But
no chance,
we shall see.
Jackie, no.
We shall see. Thank you so much for joining us. That was very informative and interesting.
Cheers, Jackie.
Cheers, Jackie.